In today's energy markets, let's take a look at WTI crude futures today as they're realizing some selling pressure down a better than 2% currently, right around the 52.35 level. Now that is the February future. I do want to point out though that we are seeing rolling of positions from February to March, as the March futures are now the more active future as we're closing in on February expiration. Looking at some of the factors playing into the price action today, I think there's a couple things you can point to. Number one, the U.S. dollar strengthening today, pushing back up to that 90.5 level. So I think that's a little bit of a transient headwind currently, but probably the bigger storyline are the lockdowns, not only here in the United States, but from a global perspective, particularly in China, where we're seeing a pickup in cases of the COVID virus there, and potential for some various regions within China to be locked down, at least for the short term. And I think that's putting a little bit of a damper on demand, at least as far as we're seeing the market adjusting for that potential. Also, I want to point out that when you look at the price action today, we are seeing the WTI crude futures, as I mentioned, yesterday's basically reaching nearly 11-month highs before coming off today. And also another trend that's interesting here is the fact that our rig counts are continuing to slowly increase. We did see an 8th consecutive week of increases on those rig counts. Baker Hughes rig count factor today was 13, a 13 rig count increase, 12 on the oil side, 1 on the gas side. But continuing to see that trend evolve here, but certainly well off of a year ago's levels, as we are seeing a little bit, as I mentioned, stabilization here. A trend that's developing and something to keep an eye on as we continue to see production here in the United States hovering right around 11 million barrels per day.